Good. It's Wednesday, July 15th, 2015. Hey, you want to do some Forex trading? Cool. Well, let's make this a strategy session. Good idea. Hello, my name is Wayne. I'll be your Chief FX Market Strategist for today. Thanks for being on my team. Yes, you're right, Kareem. Today is Wednesday, so we have oil inventory data coming out. You might want to watch the CAD. Seems like people don't want us to go through our current barriers, so that'll be interesting. Anyways, I'm with TradersWay. It's an ECN that allows you to trade Forex, energies, metals, indices, and binary options. It's the complete package for a Forex trader. And I'm here as a resource. So you put all that together and we want you to succeed, huh? So let's get going with today's session. Let me remind you that trading and investing are risky and not appropriate for everyone. As you trade along, remind yourself every day that your past performance, good or bad, is not indicative of future results. So always stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. All right. So some interesting things. Obviously, we got Janet Yellen's testimony coming up. We're going to learn a lot about central banks, as you know, this week. Critical part of our trading week. Bank of Japan, they're not feeling comfortable with the results of their quantitative easing. They're revising down some of their targets. Wah, wah, wah. Might need some quantitative easing. Might have to add some money. Chinese GDP, 7.0 year over year. Okay. Not bad. Amazing that it's exactly 7.0, and that's a psychological level for many. It's amazing that it came out exactly that. Chinese industrial production, year over year, 6.8. That's a good number. So a 4-month high. Hey. No, I'm just, Anthony, yeah, you're right. I'm not showing you any graphic. I'm just reading or talking. This is all stuff we talked about on Monday to be prepared for and trade it if you want to. Hang on, I have Trade the News talking in my ear. Sorry. So, yeah, that's a big deal, huh? So, Japan is missing its targets, and China maybe kind of, well, at least it got decent news. So again, the Bank of Japan maintained its policy stance and overall economic assessment, but lowered its forecasts. Remember, they're trying to get to 2%. They don't even think they're going to get to 2%. That's a big deal to admit that you're not going to hit your target. So what are they going to do about it? Aha! That's where it gets interesting. And everyone's saying more QE. Well, perhaps that's why the yen's been weakening lately. Some traders and investors are already front running that plausibility, and now it's come out. I mean, they gave the official statement, so now we know. So now we just got to hear from what the ECB and the Fed. Very nice. So far, so good this week. Let's start with the British pound because I still have it here. Ah, shoot. Do 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 do. Do 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 do. Looks okay. Just kind of eyeballing things. I'm going to change this to a 4-hour, see what we can see. Change it to a daily. And I'm going to measure the other one. So I like to put everything into context, right? It helps with our simple human brains. We always have to paint things in pictures. Okay. Our current top, the one we're retracing back towards now, is 50% of the entire drop over the last year. And now we're 50% of that, so I'll draw up to a 618, let's say. Is it possible that we do this? Right? It's hard to see that when you're on a 15-minute chart, right? So you have to put it there. You got to line things up. You actually have to aim. Because the deer's not going to stand still for you. Well, John asks a fundamental question. Well, we're not talking about fundamentals, right? So what we're talking about is if we're kind of in the zone we're in now, even if it goes a little higher, that's fine. And then you get a reversal pattern, what could that possibly mean? It could be a big deal. It could be a significant event. And we don't even know for how long. For a while, right? So remember, we don't have sort of like magic controlling where price goes. There's no rules of law that dictate where this thing goes. It's going to go where market participants want to go. So you said, well, if they raise interest rates, that may not be the case. Yeah, that's true. And one reason it's moving up here is, once again, we're thinking that maybe he's going to want to talk about it, maybe raising interest rates, in the next 6 months. But if the data starts coming back, or if the data starts coming in poorly, or if he starts to backpedal, or something else happens that just says, no way, Jose, whatever. So, obviously, if people think they're going to raise interest rates soon, this is not going to reverse. The question is, if it reverses up in here, if it does, I'm not saying it will, but if it does, shouldn't we be, mindful of technically of where we are over the course of the last 12 months of trading? That's actually a very, a very important thing that's happening. Yep. So if it reverses in the next couple of days, it might be worthy of a shot. Right? Because if it falls, it can fall back 150. Well, where are we now? 157. Well, then that's good to know, right? Good to know. All right. So basically what I'm suggesting is an if-then statement. If it does that, then then bear that in mind. Change your target, change your strategy, whatever. So for example, an analyst at JP Morgan just said in the last 6 minutes that the Bank of England might raise interest rates sooner than the market expectations, but won't raise before the Fed. So they're waiting for permission. Oh, let's go back to that. I love when people ask this question. All right. Where were we? Pig dog, right? Okay. You're talking about this head and shoulders? Is that what you see? Well, that cannot be a head and shoulders. Why can't that be a head and shoulders? Classic mistake. Classic. I mean, that's why I'm happy to go back, because I get that all the time. And it's not a head and shoulders. It can't be. Not even a little bit. Because a head and shoulders is a reversal pattern. We're in the context of a downtrend. Okay? And if you're talking about this being a head and shoulders, which I believe is what you're saying, no. Because the trend is this way. This would be a bullish. Come on, stupid drawing tool. This would be a bullish reversal, but we're in a bearish trend. So head and shoulders in this case would have to be inverse. Head and shoulders in the context of this downtrend would have to be like this. Okay? That's a head and shoulders in this context. This area here would be the neckline. This would be the shoulder line. Okay? We would now We would measure the distance from crown to the neck and project that out from the neckline forward and have a target up in here. Okay? That would be a head and shoulders in a downtrend. Okay? I think if you wanted to mark the situation we're in somehow, oops, that's not the right one. You do it like this. If you wanted to measure it as bullish. Okay? But the bearish part is simply this pattern. Is essentially what you're looking at. Okay. It's the highest time frame pattern. So now what you should be asking yourself, if that's what you think is happening, then price doesn't move straight up and down like I've drawn, right? So on a 1 hour, for example, it takes, say, on average 8 hours to make a stochastic cycle down, and then another 8 hours to make a stochastic cycle up. So therefore, if to make it fall as far as this projection, we need to have a series of lower lows and lower highs in the context of 8-hour stochastic cycles. So therefore, you'd have 8 hours down, 8 hours up, 8 hours down to the next support level, 8 hours up to the roll reversal, 8 hours down to support, 8 hours up to the roll reversal, and then somewhere to consolidate. Okay? That's what a bear would be thinking, and that's how you put this together. So you could just do something like, here's your trade entry Wednesday, here's your trade entry Thursday, here's your trade entry Friday. Because based on some of the strategies, like the swing strategy I was teaching you, you would measure yesterday's high, yesterday's low, and you'd sell a Fibonacci retracement. Okay, not on Tuesday, Wednesday. And then on Wednesday, no, that's Wednesday. So on Thursday, you would measure the high and low on Wednesday, and you would sell a Fibonacci retracement of that. And then on Friday, you'd measure the high and low of Thursday, measure Fibonacci retracement, and sell that. Okay, fractal geometry. And now, when you're setting up these swing trades, now you might be on, what, a 15-minute chart? And on a 15-minute chart, this is going to make Fibonacci moves up, it's going to consolidate at resistance, then it's going to make Fibonacci move down until it's hit its extension, consolidate, right? Head up for 3 or 4 hours on the in the Asian section, make a series of higher highs and higher lows, then consolidate. London opens, series of lower lows, and it also does this series of Fibonacci retracement extension, Fibonacci retracement extension over and over and over again on a 15-minute chart. But each one of those 15-minute Stochastic cycles with Fibonacci retracements and downtrends is just this one pattern that we're trading here on the daily. They're all the same over and over, whether a daily chart, an hourly chart, a 15-minute chart, a 5-minute chart. Fractal geometry, yes. Where all the information and all the patterns exist on all time frames. Okay, so remember, your charts only include time, which is down here, right? Down here, this is the time. And the other thing your chart includes is price. There's nothing else on this time, on this chart. Here's price over here. Okay. Time and price exist on this chart on all time frames, and it's always the same. It's now, and that's the price. I can change my chart from a daily to a 1 minute. What time is it now? What price is it now? Okay, it's the same. All known information is available. Now, the only thing that you change is your observable point. Okay? You pay attention, all of a sudden you start to see, similarities to other theories like quantum physics and quantum mechanics and all that kind of stuff. It's really interesting and fascinating if that's how your mind works. But all known information is available here, and all you're changing is the way that you observe the price-time continuum. And the patterns are going to be on all time frames. And I've paid a lot of attention to this because once I started really starting to believe in price action and technical analysis and price action theories, and I realized that the daily chart behaves virtually exactly the same as the 15-minute chart that I felt really comfortable with. And so I started working on refining my entries, and I started really paying attention to oscillators, not just to tell me direction in the market, but to help me enter in my trades a little bit earlier, which I started to call front running, right? I would front run the inevitable 15-minute 5-8 cross that hasn't happened yet, but my mind, I see it starting to happen. Then I say, well, I know that's going to happen, but why do I have to wait 45 minutes? Why can't I do it now? So then I would drop into, I started with a 5-minute chart. And I did that for, I don't know, a year or something. And I got pretty good. And I learned a lot about trees and false signals and stuff. And then I thought, well, 5 minutes are pretty good. I wonder if I can get this to, a little faster, even more, right? So I started using 3-minute charts, and this is back when I was using the Dealbook 360, and you could get a 3-minute chart. And I really liked the 3-minute chart. You don't have them on anymore. But so I spent a lot of time, and then I thought, you know what? The patterns in the price-time continuum seem to behave exactly the same, whether it's a 3-minute or a 1-day chart, right? So then I did something crazy, because at that time it was common knowledge. Everybody knew it, everybody said it, that you could not trade on a 1-minute chart because it was nothing but noise. And I said, well, I've never run into that problem yet. So what I did is I traded the 1-minute chart exclusively for a year. And I keep giving you this advice, right? Test and measure and adjust and reflect until you totally master something. I traded the 1-minute chart exclusively for a year. Ron, no, I did not use tick charts. So I took my own advice, or I did the advice I give you is the advice that I took myself. Well, I met with a group of traders in New York City many years ago. I'd never met them before. They were complete strangers. They were not clients of mine. They were not paying me money. And I said, well, I either did a speech at a conference, I might have done like a TV interview or something. I can't remember what it was. But I'm like, let's just meet up for a cigar after. It's going to be late, but I'm a member at a cigar bar. So why don't you meet me there? And I'll buy everyone that wants a cigar. We'll sit down, we'll talk about currencies. We'll talk about trading. Don't know these people. Just forget how I ran into them. But so anyways, I get to the cigar bar. There's 12 people standing there. Don't know who these guys are, but I'm in town. I got an hour or so of personal time, so I'm going to spend it with these strangers, right? So we go in there and buy everybody a cigar and everything. We go down to the VIP room and we light up and I say, so, what's going on? Tell me how I can help. And they're like, oh, well, we're losing money at Forex, but we believe it, and we've paid some dude some money and all that, right? And I'm like, how much? And, oh, it was like $5,000 for 2 weeks of training. So, anyways, long story short, I'm like, so tell me about the strategy. How does it work? I'm like, well, first of all, we open up a 10-second chart. I'm like, what? Yeah, 10-second chart. You trade 10-second charts? Yeah. Every 10 seconds we get a new candle. What? Holy smokes. How's it going? Oh, we've lost a ton of money. Well, why don't you keep doing that until you run out of money? Well, we don't want to lose any more money. That's why we want to meet with you. I'm like, okay, well, stop doing that. By the way, I want $5,000. $5,000 will tell you how to improve your situation. Good. All right. Stop doing that. So anyways, I became good friends with some of those guys. I think about a year later, I drove some of those guys around New York City in a white limousine. Took them to Wall Street and through Central Park, and then we stopped. We double parked my white stretch limousine out front of Carnegie Deli. We had 14 or 15 people crammed into a 12-person limousine. And if you know anything about limousines, a 12-person limousine will hold 8 people. I don't know why. It's just how it works. So we double park in front of Carnegie Deli. We go in, and I got all these people, 14 people. We take up half of the back room, load up on the big pastrami sandwiches and huge matzo ball soup, and it's great. And I go to the front, and I'm going to take care of everybody, right? And I'm like, hey, give me the bill. I go up to pay, and they're like, no credit cards. I'm like, what? We don't accept credit cards. I'm like, this, what year is this? What do you mean you don't accept credit cards? Oh, you gotta be kidding me. There's 14 people. I just spent like a huge chunk of money. Well, we get a lot of tourists and, we have a lot of problems. I'm like, look out front. That white limousine parked directly in front of your store, that's mine. She said, well, good. She took my credit card and they had a secret credit card machine. So I guess they just harassed the tourists to pay cash, right? And then, zoop, they took my credit card and jumped in the limousine and off we went. So these people went from losing money to, to doing better within a year. So very coachable guys. So I think out of those dozen people that met me that night for cigars, I probably became friends with, 3 or 4 of them. And then one of them turned out to be a scumbag. So one of them, that's pretty good. One scumbag out of a dozen. And 3 or 4 pretty good people. Yeah. That's about right, huh? That's about right. One out of 12 is a scumbag. 4 or 5 are pretty good people, and the other ones never existed. Anyways, good times. Good times. Maybe we can meet up somewhere like that and do something fun like that together. What do you think? I haven't done any traveling and public speaking other than webinars for several years now. I just, I got kids. I want to be home. Just so I don't have those opportunities anymore. I used to do probably 6 or 7 conferences a year. Always had fun. But people can have that opportunity, meet up in a cigar bar in a nice city somewhere. Why don't we have a drink in Singapore? Yep. I'm going to go out and have a drink with Daniel Chen. Melbourne. Wow, yeah. Melbourne, I'd love to go to Melbourne too. Chicago, I'm overdue for Chicago. There's a great cigar bar in Chicago, a couple of them. Not as many as you think. You're from Melbourne? I'm Australian. I don't know if you guys know that. I travel on an Australian passport. Ripper! Yeah, Nepal, man. Let's go to Nepal. I mean, there's so many of you guys that I consider, close friends. Let's go to Nepal and meet up with Debista, right? So anyways, what is this? Pig, dog? Sorry for the distractions, but I'm human. I'm a real person. I have feelings. And I care about you. So maybe one day a nice story like that will happen. I've met a lot of traders over the years, guys, and I've heard a lot of stories, good and bad, and I've learned a lot of things, good and bad. Maybe it's helpful. Right? Sometimes it's helpful to know that you're not unique and special, that that you don't have to invent something new to succeed, that a good amount of human energy has been focused on this thing we call Forex, and that you maybe can gain an edge because of that. Right? Maybe you can get an edge and say, well, some other poor bastard lost all his money and wasted 3 or 4 years of his life trying to figure out Forex, but now I can learn from all that pain and all the mistakes and the things that worked, and I can just get that quickly and move on to the good stuff. Oh, is that Stuart? Wow, that sounds great. Get that. All right, so here we are, a little Kiwi dollar action. So where do we go from here? So it made a low, then it made a lower high, then it made a lower low, then it made a lower high off the roll reversal, of course. Then it made a lower low, lower high, generally off the roll reversal. Oops. Then it made a lower low, then it made a lower high, then it made a lower low, then it made a lower high off the roll reversal. Instead of making a lower low, it double bottomed in 1, 2, 3. Right, higher high and higher low and higher high till it hit the fib. Right, so now you got to change the observable, change your fractal. Right, so you got this potentially going on now, right? Potentially, we don't know. So then it makes a lower low, right? Change the trend. Hammock! Lower high, lower low, lower high. It's slowing down though, right? Look, the lower low wasn't much lower, and the retracement's quite high. So I'd say we're kind of consolidating in here. So I would kind of start to measure that low and this low as some sort of potential support zone. And of course this one. If we don't clear through this soon, then we're just going to be stuck. Where are you guys meeting up? Yeah? Yeah, Germany is a beautiful country. An hour from Zurich. Well, Switzerland's a beautiful country. My gosh, I love Zurich. Zurich's great, man. I told my children, because they're American, produced some American, so I increased the population, and I pay more in taxes than most people making money. So I'm contributing, right? So I'm doing my best for America. But I tell my kids, because they drink, what Americans call hot chocolate, and I'm like, that's not hot chocolate. And they're like, it's good, Daddy. I'm like, no, if we were in Switzerland, it would be against the law to call that hot chocolate. I said, I'll tell you what, someday in your life, I'm going to take you to the old part of town in Zurich. And there's a little cafe that only makes chocolate. And they make the best hot chocolate in the world. And there's no doubt. There would be no debate about this. You would walk in and like, this is the best hot chocolate in the entire world. And you just know it. So I'll take you to this little shop, I told my kids. So if anyone knows, been to Zurich, you might know the place I'm talking about. It's only like 1,000 years old. Fabulous, fabulous, fabulous chocolate. Yeah, Daniel knows the stuff. By the way, some of you guys should get to know Daniel. I think Daniel is the most interesting man alive. You know, like the guy in the Corona in the Dos Equis commercials. I think Daniel Chan's the most interesting man alive. I'm sure he's got stories about Zurich. Oh yeah, Zurich, best place for chocolate. So anyways, there's a context of the Kiwi. It always makes me think, like, is this the end of the big pullback? Because I do plan on cornering the market on the Kiwi dollar, but probably not this year. If you don't mind me thinking a year or two ahead. Yeah, Tim. Daniel doesn't always hot chocolate, but when he does, it only comes from Switzerland. All right, so anyways, I hope you don't mind me thinking a year or two ahead, but I'm thinking about cornering the market on the Kiwi, but not yet. And I'll tell you now because most people don't listen, so for those that do, maybe it'll help someday. Let's see. Let me change the color of my pen. I want to see more QE out of the euro. Okay. And this will increase spending in the Eurozone. And that will significantly improve Chinese industrial production. So China industrial production, not intellectual, industrial production, which would then increase demand for commodities. So commodity prices need to stabilize, which then in turn increase the value of the Baltic Dry Index. And then we'll start to see stabilization in CAD. Aussie, Norway, if you want to get into that, Brazil, but that's probably not something you'll trade. And then, of course, New Zealand dollar. So I'd like to be long once all of this starts to happen. Kiwi yen. Who knows? Kiwi Swiss franc maybe? No, Mark, because I think at that time the Bank of England will be raising interest rates. And then also somewhere in here, I'll put it here, dairy prices have to stabilize. Not just commodities, but dairy prices. Anyone get the auction numbers yesterday? Oh, is it? I thought it was Tuesdays it came out. Okay, well, two people immediately thought it was today. Okay. And then it should be coming out very soon. A Baltic Dry Index, almost 1,000 now. Pretty good. That's a big improvement. It's still low, but it's a big improvement. So then the dairy auction results should be like now, right? I mean, like literally any minute. I'm just pulling up the website. Oh, get rid of the drawing tool. So if you don't know what we're talking about, there is a weekly auction for global dairy products, not just milk, but powdered milk and cheese and butter and lactose and everything, all right? And hydrogenous milk fat, for example. So the auction comes out, and you may not know this, but the largest export product of New Zealand, because it is a commodity producing country, most people will think it's sheep or wool or mutton of some sort. And that would be a good guess, but actually milk products, dairy products, are the largest export for New Zealand. And the value of the currency moves a lot with these global dairy auction prices. You can see that, like the last one, for example, was a bad number. Well, it's been a bad number for a while, right? Look at down, 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 down. What's the trend? So New Zealand's currency has been a lot like that recently too, hasn't it? It's a great website, isn't it? So just sort of heads up, if you didn't know that, now you know, yo. If you don't know, now you know, you know. Didn't you? Well, Please insert $5 for the next 5 minutes. Yeah. Is Biggie popular in Japan, Wyatt? So there's my Kiwi now that I talked it up. Talking it up, it's moving it. So I'm just looking around here. Dollar index is down, USD yen is down, euro dollar is up. So dollar weakness across the board. Kiwi dollar up off of its midpoint cycle level. So yeah, nothing radical happening, but we can go through a couple. And if these patterns stick, then you could continue trading them for a while. Okay, so this is Aussie dollar, for example. I think we said it was going to go up yesterday, right? Wasn't that the plan yesterday? So, you know, we had, what was that? That's Monday, New York, okay. And then there's Tuesday, London. So Tuesday, New York, we're here, right? And then up. Okay, so this kind of higher low, higher high pattern or situation is still, right? We're kind of in a channel this way. And that'll continue to happen until it stops happening. Okay. So you take yesterday's low, and I guess you can do it like yesterday's high. There's a high in Asia. Now people are buying it back off the 21. And it has the potential for that. Now areas of concern would be this, okay? If we get through that area, very, very, very bullish. Well, it'd be the case, right? Because the Chinese numbers came out in Asia, right? And it fell for most of Asia and through the European session. But what's the key question when trading? Where's the support? If it's an uptrend, right? So once it made a high higher than the resistance, it's an uptrend. So like on Monday, this is the pattern we were talking about yesterday, right? Double bottom, higher high, wait for the retracement and long it, right? So once it's up here, where's the support? Right here. Wait for the retracement, then it's up here. Right? Where's the support? If it makes a higher high, where's the support? You just keep doing this, rinse and repeat, rinse and repeat, rinse and repeat, rinse and repeat, until it does this. right? Well, Mike, this could be something that you're practicing. So let's say you're a bear on this pair. Okay? Double bottom. Should you sell? You're a bear. No? Okay. Higher high. Should you sell? Right. So you can't sell, or you shouldn't. I mean, if you were really aggressive, you might try this. Maybe, right? It made another higher high. Should you sell? Made another higher high. Should you sell? No. Right? I mean, just should be easy. What if it hits the 230 EMA and drops? Should you sell? No. If it drops down in here, should you sell? No. Should you sell now? Maybe. Because you got something going on up here. Okay, but maybe is the answer. Not for sure, but maybe. How about now? Absolutely, totally, for sure, 100% you're going to sell this sucker. Not maybe, 100% certain that in some sort of retracement, you were going to sell heavy. Okay? And then once it makes a lower low, you're going to identify previous level of support, should be resistance in the future, and you're going to sell that, so on and so forth. Okay? That's it. Well, yeah, okay. Mike says, he takes account in the older swings. That's cool. I mean, it's all the same, right? Look. Right, that's why I identified this earlier. Okay? What are you going to do now? You're going to probably trade in range, right? So in that case, you're going to sell this. Or you're going to wait for a lower low, which it did, and then you're going to sell the lower high, which it did. So you're short one of those areas, right? Either the double top or the lower high, right? Right? It's just a range-bound strategy, so if you believe it's range-bound, then you'd find like clusters of lows and just say way down here there's just a lot going on. So your general strategy as a bear is take it from the high to the low. Yellen says economic conditions likely to justify raising rates at some point this year. She said it officially. Overseas developments pose risk, so they're not going to do it in September because of Greece. That's what I read. They're not going to do it in September, but probably December. Oh, she says overseas developments pose risks for the U.S. economic growth. Igor's so funny. But it's almost, no, look, she just said December. Where am I reading this? Oh, a little birdie told me. TradeTheNews.com. I get the news fast, my friend. I don't have time to wait. All right. Any questions? No? So, time to buy those dollars back, don't you stink? Now that Janet Yellen just said she's going to raise interest rates? Right? I don't think I need to say that, right? So, I would start trading, folks. In fact, I'm probably going to pull the trigger on the webinar because I'm going to have some work to do. But the Federal Reserve just told us in text to Congress, right? That would actually constitute a congressional testimony that they're going to raise interest rates this year. So now it's time to rebalance our portfolios, okay? So let it be written, so let it be done. So what do you want to do, buy some dollars? CAD might be interesting too. CAD dipped a lot on the initial move. Pound dollar still stuck on a psych level. Be a little careful there. I'm going to move to this setup here. Do you really want to trade me? Marcia's dollar bull. Yeah, so let me make sure I'm clear. The Federal Reserve, the central bank of the reserve currency for the entire world, just said to Congress in written testimony that she will raise interest rates in December. That is dollar bullish. That will appreciate the value of the dollar. Find a conservative way using patience and discipline to enter a dollar long trade would be the idea at a reasonable fair value. Yes, Marcia, but the issue is, and I talked about this yesterday, if, let's say you lined up all the central bankers of the world, and you were going to take their photograph, and you had to have them stand in order of which they are going to raise interest rates. Okay, you got Yellen in December. Who's next? And that's all you have to do, or not all, but that's a big part of macroeconomic analysis. Which currencies are going to appreciate versus other currencies. And it'll have to do with who's in the cycle of raising interest rates, which is tightening. Who's in the tightening cycle, and who's in a loosening cycle, right? So that's what you need to do as a currency trader. So we learned today, for example, the Bank of Japan, in the midst of quantitative easing, is not hitting their target. They just told us. I need to emphasize this. It's not opinion or theory. Hey, you know, the data's not that good. I wonder what's going to happen. They just told us the Japanese yen should be weak. Okay? So are they going to raise interest rates in the next 12 months? No! How about Draghi? Hey, I thought Draghi told us he was going to do quantitative easing until 2017. Am I wrong? Didn't he, tell us? Where's the debate? Get in a trade. Let's make some money. Okay? Oh, and by the way, I should also point out the context of which this move is happening. The world just learned something important, significantly important. Portfolios will need to be, and you may not get pullbacks. Because this isn't not trading PPI news, right? Like, oh, well, when I trade in a normal market, the PPI came out 0.3 versus 0.1 expected. I mean, dude, this is much bigger than that. It's probably a straight shot all the way. Igor, is Canada going to raise interest rates soon? Igor, is Australia going to raise interest rates soon? Igor, is Sweden to raise interest rates too? How about Poland? Get on, sell some zloty. I mean, just go through the process. It's called macroeconomics. And then go through the process again. Well, if British pound is going to raise, if the United Kingdom is going to raise, or should I say Great Britain, right? Great British pound. If Great Britain is going to raise interest rates next, let's say in 2016, then, I mean, you could same thing. Pound, Polish zloty, Turkish lira, British pound, Swedish krona, pound, you know, just over and over and over again. Just that's what you're doing. Match up the ones that are probably going to be strong in the short run or shorter run, whatever your time frame is, and find ones that are not likely to be strong in that same time frame. Pair up the strong versus the not strong. And if you're lucky, the not strong is actually weak, and you're going to get paid even more. Okay? So I got to go. Mind. I got to trade, yo. Rand. Sell it the rand. Yeah. So hey guys, thank you for being on my team. Sorry for all the chit chat today. It was pretty quiet until this testimony, but now it's time to do our jobs, right? So you keep me sharp, keep focused, and make me want to be a better trader. So peace on earth. The world needs to hear that every day. 2 or 3 times a day would even be good. Peace on earth. May the pips be with you. May your profits be above average. Thank you for being a client of TradersWay. And also a recording of today's session made available on the homepage of forex.today. I will see you, right? I'll be here, will you? Thank you for your loyalty. I appreciate it, and I really do mean that. I hope we have an opportunity to meet up for matzo ball soup and a cigar or something someday. Something to that effect. Cheers, guys. Peace out. Got to jump, babe.